What's going on, everybody? Zach Macmillan back with you again for another episode of Let's Talk Mortgage. This time around, we are talking about insurance, specifically forced place insurance. What is it? How does it affect your mortgage? Why did it get applied to you? So this is what we're talking about on this episode this time around. So stick around. Let's dive right into it. So I have been getting a lot of calls from current customers, previous customers who I haven't even worked with before, people who are just with the bank, getting phone calls about insurance, questions about their mortgage payment increasing, what's going on. I'm not sure what the heck is happening here in Florida, why insurance is going up so much, why carriers are dropping out of Florida. But anyway, what's happening is a lot of people are losing their coverage. A lot of people are getting forced place insurance applied to their mortgage payment. They're asking questions about it. So felt the need to come on here real quick and give you a quick little information backdrop around what forced place insurance is and how it can impact you and how you can help avoid it as well. So forced place insurance is simply your bank, your mortgage institution, whoever you're financing your home through, they require you to have insurance in place, homeowners insurance in place to protect that property in the event of some type of disaster. So whether it be a fire, flood, hurricane, whatever, your home is the asset that's secured by the loan. So therefore, they require you to carry insurance on that particular asset. So like I said, if something happens, where our money is protected, so is your home. So when that coverage, your homeowner's insurance becomes canceled, is lapsed, some form where it's not there like it's supposed to be, your mortgage institution can put coverage there on your behalf. It's not an illegal thing. They can do it. They do have the right to do it because the home is secured by their loan. So they can put insurance in place for you. Hence why it's called forced placed insurance. Now, there are a couple things that you can do to help avoid forced place insurance being enacted on your behalf. First thing you could do is keep some insurance in place for yourself. If you get into a situation where your company no longer wants to carry insurance for your home or provide insurance for your home, you can then go back around and shop for different insurance carriers to see if they have any type of coverage for your particular property, what coverage works best, who has the best premium for you or pricing for you. And so you have the option to kind of shop around if your coverage did lapse or is canceled for yourself. In the event you can't find coverage for yourself, you can then therefore take the forced place insurance that has been provided on your behalf by the bank or the mortgage institution and keep that in place and just continue to pay your mortgage payment or whatever form of method of payment you have for your forced place insurance, and just go about it that way if you don't want to go about the process of searching for some homeowners insurance. Just some quick information for you in regards to forced place insurance. It is highly unlikely that your bank or your mortgage institution is going to go out their way to try and find the cheapest coverage for you. So it's most of the times when I see forced place insurance enacted on someone's behalf, it's typically not the cheapest that you could find in terms of insurance. They're not worried about saving you money. They're worried about making sure we get a policy in place that gives us enough coverage to secure that property. So in the event that something happens, we're making sure we're covered. Everybody's covered. You keep your home, our money is safe because the home is in place, so on and so forth. So like I said, they're not going to shop around and see who has the best coverage for you or the cheapest premium for you. We're just trying to find somebody that works, who's going to cover it, so they can cover it for enough, boom, put it in place, going about your business. So it typically behooves you to shop around for the best coverage for yourself, just to make sure that if something is working well within your budget, you have set in place for your mortgage payment, okay? Now, you may be asking yourself or getting ready to ask me, is it a case where I have to have insurance on my home? Can I just forego having insurance on my home? So two answers to that question. You're not required to have homeowners insurance on your property. However, if you currently have a mortgage on your property, then yes, you are required to have homeowners insurance. Hence why that bank or that mortgage company has the right to put forced place insurance in there on your behalf, because that home has to have homeowners insurance on it if there's a mortgage on it. So there's your answer. So generally, if your insurance coverage has lapsed or has been canceled, even if your homeowners insurance was not escrowed, rolled into your mortgage payment, typically if they put forced place insurance in there on your behalf, they generally roll or escrow that forced place insurance. Y'all know I can't talk. They typically roll that forced place insurance into your mortgage payment to make sure it's getting paid. After they indicated the fact that you haven't paid it or haven't been able to keep up with that homeowners insurance, we're now going to put this into your mortgage payment to make sure it is getting paid like it's supposed to be. Like I said, the main purpose is to make sure that you have homeowners insurance on your home while you still have that mortgage payment in there. So it is in your best interest, where if you did not have that homeowners insurance escrowed into your mortgage payment, and now it is because you have forced place insurance, to reach out to whoever your mortgage company is, your servicer, have that conversation with them to see what your options could be to find your own insurance, and whether or not you can go ahead and remove it from your mortgage payment like you previously had it. So that's something you want to discuss with them to see if that's an option for you. Okay. So what's going to happen is, it's not as if your bank or your mortgage institution is just going to wake up overnight and say, hey, listen, you don't have homeowners insurance. The next day, they put homeowners insurance on there. Typically, the process works is they find out that you don't have homeowners insurance on your home currently. They will send you a letter, send you an email, maybe give you a phone call, indicating that, hey, we found that you do not have homeowners insurance on your home currently. We need you to go ahead and take care of that. Did you switch? You know, what happened? Make sure you get this information over to us as quickly as possible. If they don't hear anything, traditionally within the first 30 days, they'll send a letter out again saying, hey, we have not received any information regarding your homeowners insurance update. We'll let you change carriers, whatnot. So we have begun the process of looking at some homeowners insurance for you. And here is what you could potentially be paying if we secure this policy for you with this homeowners insurance that we found. So if you choose to go with this one, okay. If you found something for your own, please send it into us so we can update your information on your mortgage payment or your policy with us. So please let us know as quickly as you can. If furthermore, they have not received information regarding your homeowners insurance by the time you get the next letter from them, typically after about 45 to 60 days, but the next time you see that letter, that forced place insurance will be in effect. It will be issued out. You'll receive a copy of the policy. You receive the information in the mail, and basically your mortgage payment would be reflecting of that new homeowners insurance policy for you that's been put in place by your mortgage company. So the reason why I brought it up is it's not as if they just put that insurance in place for you automatically, knowing it's going to be more. Knowing that you had the option to look and search for other insurance for yourself. They give you some type of heads up, some time to go around and shop some carriers, to look around, see if you can find some coverage for yourself before they go ahead and enact that forced place insurance for yourself. So you definitely want to take advantage of that window if your homeowner's insurance just happens to have lapsed and you didn't realize it, or got canceled and you didn't realize it. So they give you some time to shop around and find some carriers. So get with your local lender, your local real estate agent to refer you to some local homeowners insurance companies, or you could just Google, homeowners insurance near me. I need to do it that way and skip the middleman. But anyway, find some homeowners insurance for yourself, shop around, see what are some good carriers, see what's going to save you some money rather than having that forced place insurance put in place for you. Okay. So there we have it, ladies and gentlemen, just some quick information about forced place insurance, how it can be enacted on you, how you can help avoid it being enacted, different ways to kind of help prevent and kind of get ahead of it being put in place. So just some quick information. I hope you found this very empowering. Hope you feel a little bit more comfortable understanding your mortgage and how things can happen from time to time. But of course, if you have any questions, feel free to reach out to me. I hope to see you again next time right here on Let's Talk Mortgage. I'm Zach McMillan. I'll catch you next time.